What's going on, everybody? It's Jeff here. Welcome back to the channel. Finally, an end to a choppy week. We had a couple good earnings plays. Disney, Upstart, and Wish are probably the best. We also had a few good small cap runners. But in this video, I want to talk about a stock that I gave as a swing idea twice. The first time it ran $20. The next time it ran about $7. I know a lot of people are invested in it. It is Lucid Motors. I know some people are invested in it. And if you are, you must be sitting pretty green right now. So I want to give you my take on the short term and on the long term and just break everything down for you, especially because they are set to report their earnings on Monday. So let's get right into it. First off, let's take a look at the SPY. As you can see right here, the entire week, pretty flat, a little choppy, giving us no direction. If we take a look here at the 30-day chart, once it broke that downtrend, it was a nice steady gains for pretty much the entire month up until recently. I will point this out as well. For the last year, we reached a new high on the RSI of 47 once the SPY hit their all-time high of 470. So I'm going to be looking to see if this can cool off just a little bit. We did get a little bit of a dip right here, and as you can see today, we are up almost a full 0.75%, but the RSI is still very, very high. I do think coming down to that 50 moving average like we did previously before the break of that is still a little bit far away. It's sitting at 451. So that's something I'm going to keep a very close eye on. I also want to mention this as well. This is the fear and greed index, something I look at on a daily basis. We are sitting at 82, which is a point of extreme greed. This is a good indicator for market sentiment. How is the market feeling on how overextended stocks and just the entire market is right now? As you can see here, last week when we were a little bit higher at that 470, the extreme greed setting was about 85. But if you look a month ago, once we broke through that 50 moving average and went all the way down to the 100 moving average, which we hadn't done in a while, it went all the way down to 32. So it's a good time to add to your long positions. I always recommend dollar cost averaging. That's why 401ks and IRAs are so successful, because you're not only buying as the market goes up, you're also buying through all of the dips as well. So keep an eye on this. You can just Google fear and greed index to take a look at it. But let's talk about Lucid Motors. It's been on an absolute tear. I gave the first alert on October 27th. I said right here, customer deliveries to begin 10:30. Or I said it was a good DCA swing idea. Let's see if we can get it to finally break above 30. It went $20, cooled off a little bit, and then I gave another swing idea again on November 10th. Saying it came down quite a bit. Bank of America gave a $60 price target going into earnings. I said you always need to give room, and this is like we talk about dollar cost averaging. Always give room. Don't go full in a position. It dips $1, $2, even maybe $3, but it's still showing a bullish and upwards trend, and it hasn't broken any support. It's always good to be able to add to it, and lower your dollar cost average as well. I said last time I gave a swing, it went $20, and this went all the way up, I think, to about between $45 and $47 from that $40 idea. But let's talk about where this can continue to go in the short term. So right now, it already has a pretty good size market valuation. I think about $75 billion. And here's where investors are looking for Lucid right now. So the biggest thing about Lucid, if you've been following them for a while, then you know this. And if you haven't, is the CEO did a great job promising these massive deliveries and numbers in the future for their amazing vehicles. However, they did have to delay their deliveries twice. Okay, so that is a little bit of a bearish sign, and where investors might feel a little bit of wait a minute. And they're looking very closely to see if these numbers are still going to line up. Does the company still feel they can make these deliveries over the next few years? Where are they sitting on their cash flow? They had $4.6 billion in cash once it completed its merger deal. Where do they sit right now? When it comes to the actual earnings numbers, well, they just started making deliveries and they're still in a negative, a negative cash burn. So they're not really looking for those numbers specifically, whether it's going to be estimates or not, because it's so new and analysts can't even really put an exact number on this, but it's more or less of the guidance. Where do they see the company going in the future? Do they still see these numbers? But let's put this into a little bit of different perspective for everybody. Take a look at Tesla. It's sitting at a 1 trillion market cap, and Lucid is sitting at a 73 billion market cap. Okay, and Tesla is much more than just an EV company. It has numerous other products, but it's sitting about 8% of the market cap, about 70, or let's say 7%, 73 billion into 1.5 trillion, it's about 7%. But on their quarterly revenue, we have 174 million, which is just over 1 or 2% of that 13.8 billion. And to also put it in perspective, it has the same market cap as Ford and General Motors. Now, EV companies are really not the same in my opinion, and I also feel in a lot of other investors and analysts as an automotive company because they are revolutionizing the future. All right, Ford and GM, the auto industry, that's old money. All right, that's old news, and EV is new. So I definitely can see the higher valuation, but is a $73 billion valuation really valid for it? And if it is, how much more can it go to the upside? Do we see this as a $100 billion market cap or as a $120 billion market cap before they can really start putting some numbers together and to see if this company can actually be profitable? Many companies come out. There's going to be many startups. If you do some research back into the Henry Ford days, there are a lot of automotive companies that started up that just didn't make it. Even think back into my lifetime. When you look at Pontiac and Saturn and Oldsmobiles, and yeah, they were owned by other companies, but like I said, it kind of just crumbled on each other. So not all of these, EV startups like you see now are going to be successful and profitable in the future. But like I said, that's exactly what investors are going to be looking for when it comes to Monday's earnings. So if you do have stock in Lucid still, there is a case, for argument for it to run back up and to fill that gap of another 17%. However, I do see it slowly start to fade to find its new support in the short term. And like I said, in the long term, once they can put some numbers together, yeah, you could definitely see this stock, I don't want to say being the next Tesla, but being a mini Tesla. But as you can see right here, it also has the capability to pull back insanely. Now, I will never, ever forget this day right here. This was a Monday. All right. Yeah. The 22nd. I'll never forget this. And I ran, CCIV at the time, all the way up from just under 20 bucks. And back in this is when SPACs were hot. There were, everybody was investing in SPACs at this time. And this was a big, big deal. And once they announced the definitive agreement, which was supposed to be announced on a Tuesday, they dropped it after hours on a Monday. I ended up getting stuck and had to sell this $40 range. And I got greedy. And I figured after the announcement, all right, it was going to pop, which I think it did after hours a little bit, but this was a classic, buy the rumor, sell the news. So it does have the capability to do some serious pullbacks. So keep that in mind going forward. Next thing, very briefly, I want to talk about is the other one in this sector, which is Rivien, which is backed by Amazon. And I think a lot of people, are seeing the bullish sentiment. But one thing I do want to point out is its valuation was $78 a share. All right, and we're already sitting at now about $130 a share, which adds over 100 billion market cap, and they haven't even really, they only have a couple hundred vehicles on the road right now, but they haven't really started their production. Amazon has revealed a 20% stake in the company as of right now, and of course, because they're a truck maker and Amazon has taken over their own delivery, you can know every single vehicle is going to be from this company, but this is running right now because IPOs are hot. You've seen me mention this in other videos. More importantly, low float IPOs. And if you're, and this just IPO'd obviously just a couple days ago, but if you're wondering how to find the float of an IPO, you can just go to MarketWatch right now and you can type in any stock. If you look at something like Apple, it has a very, very high float of over 16 billion. And if you look at another one, which is MRAI, this is actually a recent IPO that just IPO'd, I want to say about a week and a half ago. Let's jump over to the 1 month chart to find exactly when. Right here, yeah, it was the 27th. This has a very low float. And the reason why, investors and traders will look at the float is because the lower the float, the less buying pressure it takes for a stock to move. Okay, so that's why you see Apple, if it spikes, on massive news, it might go $1, $1.50 because the float is so high that it takes so much buying pressure, so many people to come in with so much money and shares for the stock just to move a little bit. When the float is low, once you get that massive movement, that's when stocks really rip. They rip hard, 20, 40, 60%. So this sector has been really hot lately. And that I think is a big reason why this stock is popping. But it's probably sitting right now at the stock right about 115 billion market cap. It is insanely overextended. Let this find its ground, let it stabilize. You have plenty of time to invest to it. Don't just jump into it. If you're looking to trade this one, absolutely play the momentum. Be very careful, because I'll jump over quickly to the 5-day chart. This thing can move pretty wildly. It sat at support, ran all the way up $8 in very quick times. So if you're experienced and know this is one I played on the opening day. I like just to play IPOs. However, I think I only did, I want to say, a 1/100th of my normal position size. Just because I'm not, like I said, it's insanely volatile, and you get caught in down halts and get ripped on this one. But I always like to build my experience. So I just go in a very comfortable amount. If it rips on me, pulls on me, 10, $15, I lose a little bit of money and so forth. I don't go too crazy, but I have some skin in the game. But let this one come down as well. So I hope you found some value in this video. I'll see you in the next one.